a competitor of Google Maps. Yes, we're talking about MapmyIndia. This is, though not a consumer-driven company, mainly focuses on businesses, but we're going to do a KYC just on this one. Welcome to NDTV Profit. I'm Hiral Dadia. With me is Puneet Javeri. An interesting one to speak about as well in terms of MapmyIndia, and a couple of questions that we have, Puneet, because the kind of growth that the company has been able to achieve has been really strong. Let's take the viewers as to what we would want to know from the management basis the KYC that we have. First up, the growth has been very strong over the last 2 to 3 years. How sustainable is that growth going to be going forward from here on, and whether it will be sustainable or not? Second up, if you talk about FY28, what is that revenue growth target momentum going to look like from here on? Because one, the last 3 years have been strong. Two, you're talking about sustainability. And three, with that sustenance, what will that FY28 number look like?
Well, largely they are targeting roughly 1,000 crores in terms of revenue for FY28 and targeting margins of roughly about 35%. Will that be the sustainable momentum going forward, because they are a tad above that current level? That will be the third key question that we are going to be asking. The fourth one is largely in terms of the new vertical, that's the IoT vertical which they have. Now, growth largely has been slightly slower than the traditional vertical, even at a smaller base. What would that look like over the next 3 years? That'll be something to watch in terms of business vertical. And finally, the fifth question is this expansion into new partnerships. Now, this is largely based on what the company is doing in Southeast Asia as well as in the EV space. So those will be key for the company in terms of growth going forward. And hence, those are the 5 key aspects that we'll be watching out from this conversation with the company.
Right, let's actually understand now what the company does as well. First up, when you're talking about MapmyIndia, you're talking about a company which actually offers digital maps as a service, and that's the reason why, you're talking about the service called as MaaS, that's MaaS. That's what the company does. Moving on, if you talk about their products, 3 specific ones, you're talking about digital maps, you're talking about geospatial software and IoT technologies. And it's a B2B and a B2B2C market leader for maps and geospatial products. So they do cater to the customer, but it's not a direct catering that they do. It's an indirect catering that they have with regards to the consumers. Mainly B2B and B2B2C is what you're talking about for both these products.
And that's largely, developing into its 3 key products as well as suite offerings that it calls it. Now, since it's offering digital maps, that's where the maps as a service comes in. But they also offer a new platform as well, which we will talk about during the show as well. And that is what they call as platform as a service. And finally, since it is software related, they have a lot of software-led products. Along with that, they also sell the hardware as well for the same. So software as a service is the 3 key products that they offer. They are divided into 2 key segments and 2 key divisions is what they call it. One is the map-led division. This is wherever the digital maps are used, and this is used across sectors. If you own a car, you own an India-based software, that is of MapmyIndia, and essentially that is the map-led division. IoT-led division is still new. A lot of new products, IoT-led development is what's happening in that aspect as well. When you look at the market-wise, there are 3 to 4 key segments. Automotive, mobility tech, consumer tech, as well as enterprise digital transformation is what we've divided in. But largely, there are these 2 key verticals, which is automotive as well as mobility-led, which come together, and consumer as well as entertainment digital transformation, which come together as well. So they do categorize it as 2 key verticals for just in terms of broadening the key aspects. We've divided into 4 key segments, but that is about CE Info System as well as MapmyIndia, a complete offering in the digital services space.
Interesting company to look at, but let's understand the rating parameters that we will be watching out for. First up, you're looking at the income statement. That's the first check. The balance sheet, cash flows, return ratios. As always, you're talking about the shareholding, street credentials, valuation, and the street coverage. But first up, let's start with the income statement. If you have to look at the income statement on an overall basis, a robust financial growth is what they've demonstrated, particularly in its high-margin map-led business. And it's a high compounded annual growth rate is what you've seen. If you talk about the revenues, you're talking about almost 32% coming in there over the last 3 years, indicating high demand for its products and services. Profitability and EBITDA, they have also remained healthy, consistently hovering around that 40 to 30% respectively, reflecting a capital efficient and scalable business model. And their order book also has been expanding. In fact, if you talk about their open order book, which is the future committed revenue, that's grown significantly, providing strong revenue visibility, confidence in achieving its long-term revenue milestone of crossing that 1,000 crore mark by FY28, as Puneet was mentioning as well. So that's with regards to where overall business goes, and that's the reason why we've given it a thumbs up so far.
Well, the second key vertical is largely in terms of the balance sheet is what the company is looking at. And you will see a very steady progress essentially in the reserves. And that's largely led by the profits that's reflecting very well in its balance sheet. Over the last 3 years, that's reflected in roughly from 531 crores, it's gone all the way up to 780 crores. And that's essentially the profit getting added in the reserves. When you look at the cash, it's largely been stable at roughly about 60 to 70 odd crores. And that's also led by the company's continuous investment in the business. Once it stabilizes, essentially in terms of product offerings, you will start to see the cash level also go up as well. But despite the stable cash levels, we've given this a thumbs up, largely led by the strong profit that the company has been generating over this particular time frame. And hopefully, over the next 2 to 3 years, you'll start seeing the cash and bank level as well start to inch up in line with the profitability of the company. So a thumbs up nonetheless.
Okay, so that's a thumbs up on the balance sheet. Now let's look at, the cash flow statement. Now generally, it's positive and has been increasing if you have to look at the last 2 years, FY24 and FY25. The cash flow from operations is consistently positive, indicating that the core business is profitable and a reliable source of cash for the company. And this is a strong positive sign of financial health when it comes to a technology company. If you talk about the cash flow from investment activity, that is consistently negative, which is indicating that the cash is being used. It reflects that the investments in the non-current assets, may be property, plant, or equipment, and even financial investments, that is where they're using it. In fact, FY25 has seen the largest outflow as well. If you talk about the CFF, it's volatile, primarily negative, so indicating cash is used in recent years. And this negative number in the last 2 years is primarily driven by dividend payments and repayments of financial liabilities. Now, since the company is stated to be largely debt-free, the outflows indicate returning cash to shareholders and also servicing the minor long-term obligations. That's what the cash flow looks like so far. But because the number is negative on the net cash flow, a neutral rating there.
Well, the fourth key aspect is return ratios, and that's largely been quite positive, to be honest, continuously increasing from the 21% all the way up to 25 to 26% that it has maintained over the last 3 to 4 years. So not too much to dispute. It's a clear thumbs up. We will be looking at how this starts to essentially stabilize, and it should at roughly about 25 to 26% is what the company is also guided as well. But when the management comes, that will be the other key aspect that we'll be quizzing them on as well. But a clear thumbs up based on the historical data that the company is given, as well as the generation of the incremental cash that they're deploying in technology, as well as in capex, is having its positive turnaround essentially in the numbers as well.
Okay. Moving on, let's look at the shareholding pattern. Now, relatively stable promoter holding is what we've seen, but significant shifts have happened on the institutional and public ownership side. One of the key positives is none of the promoter holding is pledged, and that is one of the key criteria that you should be looking at. FII, FPI, again, the holding has seen notable volatility, but it shows a general upward trend over the last 3 years. And there's a significant and consistent increase as well when you talk about DIIs. Mutual funds has shown the most significant and consistent increase, which is reflecting growing domestic institutional confidence in the company. So what the public has lost, what's gone down from the public has actually been added to the FIIs and DIIs, and hence a thumbs up on this one.
Well, the street cred is the other aspect that we're looking at. And, the company listed roughly about 3 years ago in 2022. In the last 1 month, 6 months, as well as year to date, the performance has largely been flattish in that sense. And when you look at, the 1 year performance as well, it's actually down in this particular point of time. Now, that's almost down 19%. One is aspect that, it's not cheap by any means, and we saw a lot of mid-cap as well as small-cap companies come down essentially in this particular point of time since October to November last year. But even since its listing roughly 3 years ago, the stock's given about 18% return. That's lower than the benchmark. So that's one key aspect that we're looking at. The other one was what happened essentially in December 2024 when a controversy erupted regarding its B2C entity. The company has, mentioned a lot of clarification, but that did have an impact essentially on the stock price, particularly around December of 2024. It has moved on post that. So it's definitely something that, in terms of the revenue targets of 1,000 crores will definitely boost the stock price performance. But for now, we've given this a thumbs down largely based on the historical data over the last 3 years since listing.
Okay, so that's the stock performance, but let's look at what valuations are indicating. Valuations, yes, are significantly high because the company is trading at a substantial premium to its peers, and if you have to compare it to the broader IT software industry as well, which is actually indicating high growth expectations, and that 1,000 crore number for FY28 categorically tells you what the expectation is. Now, the current P is nearly, if you talk about it, if you're talking about FY26, 46 times, FY27, 37 times, which is implying overvaluation based on the future growth forecasts. So you're talking about high growth potential, your strong margins, your strong order book, and all of this is actually reflecting in the high premium, which is actually telling you that probably the market has strong confidence in the company's growth trajectory, leadership in a high potential segment, which is digital maps and IoT in India, and robust profit margins. Whether they do translate or not is the question, but on the back of the expensive valuations, we've given it a neutral rating so far.
And that's largely, Hiral, what the analysts are also penciling in, a higher growth, newer categories, newer products, as well as, the strong growth opportunity over the next 3 years. With the management's firm target of about 1,000 crores is why they've given, 5 buy calls on this particular one. 22% return potential, even from these current levels, is a positive for the company. And hence, we've given this, a neutral in that sense, given the limited coverage in terms of analysts. But largely, a very strong return potential is a key positive, and hence the neutral rating, that positive aspect coming into play here.
Okay, so that's, the analysis of the 8 parameters that we're talking about from the income statement. You have the balance sheet check, which is clearly telling you a thumbs up, thumbs up. Your return ratios, again, is a thumbs up. Cash flow is a neutral. If you look at the next 4 as well, you have 1 thumbs up, which is the shareholding. Your valuation and street coverage and outlook is a neutral, and the street credentials is a thumbs down. So that's the overall 8 parameters that we've rated so far, out of which you're talking about around 3 or 4 thumbs up, 2 neutrals, and 1 down. So let me also get in Rakesh Verma, co-founder and CMD at MapmyIndia, to talk to us about what is in store from here on. Mr. Verma, welcome to the show, and always a pleasure to speak to you at NDTV Profit. We started the show off with a couple of questions that investors would probably want answers to. One, the strong growth potential that you've probably penciled in from now, or the last 3 years, which have actually given you strong returns, not only from a revenue or margin perspective, but overall, the outlook that you stand at, how sustainable is that growth going to be, number one? And taking that into consideration, do you think you will overshoot that 1,000 crore mark already in FY28 that you've guided for?
Thank you for giving me the chance to come to your show. To answer your question directly, well, we had the investor presentation in June of 25, and we clearly stated how we will reach that 1,000 crores. Now, we are pretty confident about it. If you ask me today, yes, we are on track. We don't go by quarter results. We go on a yearly result. So if past is a reflection, then the future is also going to show the same kind of a trend. That's what I would like to add here.
Mr. Verma, very good morning, and thanks so much for joining in. Even post Q1, we saw some strong comments coming from the company as well in terms of the new partnerships that you've developed. I just want to highlight and talk about, a new one which is specifically a very consumer-focused one, which is Zepto, and that the company has partnered with. Could you talk to us essentially that is there a lot of products in the map-led category that's driving this particular partnership, because you're also doing and investing in this particular one? How is that essentially different from what the company has done previously, and is that something that's replicatable with other e-commerce as well as quick commerce companies?
I would like to slightly deviate and answer your question. In the recent past, I'm not talking about too much past, I'm talking about even just 7, 10 days. You have seen how Mapple's app, which is the consumer app, which is the flagship product of MapmyIndia, it has gotten almost 10x download more than what it used to be 10 days prior to today. Now, behind this consumer app lies our platform and product and technology. And these platform products and technology is what is offered to B2B and B2B2C, as you just now talked about, whether it is automotive A&M mobility, or consumer enterprises and consumer-facing companies. So it's what we are doing through this Mapple's app is trying to showcase the presence of our technology and make sure that people understand India, while India is working towards Swadeshi and reliable homegrown products, MapmyIndia is ready not just for consumer, but also ready for its enterprise businesses.
Largely, do you think that this will essentially be replicatable with other companies as well? And what are you investing these 25 crores for in this Zepto partnership?
We have not invested yet in Zepto, but we have a partnership on the business front. Investment is another decision based on other factors. We are moving very fast in the quick commerce and e-commerce space, which helps us in many different ways. You know, the quick commerce folks require the navigation in a different way. They don't care which is a good road or not a good road. I think the drivers just drive through any gully kucha wherever they want to. So it's an interesting sector for us, particularly the quick commerce. The e-commerce business, we are very strongly present with the players like Amazon, Flipkart, or even others like PhonePe. You can keep naming them. So our growth is being driven because of the technology and which I can say in simple way, what is the PaaS service, which is the platform-based APIs, SDKs on which these companies build their own application.
Mr. Verma, you're talking about Mapples, which is again a part of your consumer tech and enterprise digital transformation segment, a good growth that did come in FY25 itself for this segment. What is going to be the long-term strategy here? Because you're talking about new product launches. You have Mapples, that's the street view. You're talking about 3D metaverse maps, real-time traffic signal timers. How will these actually translate into tangible revenues, or even for that matter, customer acquisition for you?
You said it. Thank you for bringing it out. Well, you know, how people will know the technologies which are present with MapmyIndia. And we are using the Mapples app to showcase that, while at the same time making sure that the more users use it, the more feedback we will get, and it makes our platform our platform and the products are data based, and to keep improving the data, these feedbacks help us a lot. So the more the Mapples app becomes popular and more people use it, it will have a direct impact on our revenue coming from automotive and enterprises.
Okay. And if you have to look at the other two segments as well, that is automotive and mobility, and if you have to look at platform IoT-led businesses, how are you seeing the growth in these two versus the consumer-centric business, and what will drive you to that 1,000 crore mark in FY28?
Well, you know, the two traditional businesses we have, the automotive and the corporate enterprise. The two other businesses which we have are going after are the IoT-led and the IoT-led and the government defense. So the 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 growth in these later two are definitely expected to be higher than the other two. It's not that because the other two have already reached a certain level. Now the other two is also, which is a MAPS and the corporate, is the growth is being added by having our presence in Southeast Asia, which at this point of time we are in the go-to-market stage, and the results we are seeing from the 10 Asian countries is quite quite good. And we hope that by FY27, 28, these 2 years, we will have a good international revenue kicking in.
Mr. Verma, largely one question on what you've essentially done in the IoT-led products, because even Q1, your margins were roughly 45 to 46%, but your map-led division had higher margins at 54%. So is it that the vertical is still essentially in terms of product innovations still finding its way? Or do you expect that in the near future, by the end of this year, you'll have a certain level of products and then you can start to have further expansion in terms of margins as well as growth for IoT-led vertical?
Yes, that's exactly what we are striving for. See, IoT-led business came later, last 2, 3 years only, and there are a lot of things which we were examining in that process. Also, we felt that if we own the company 100%, it will help. It will make IoT-led business more under the control of MapmyIndia, which has happened now on September 1. And going forward, we see a great opportunity in the IoT-led business and the growth to happen there.
Mr. Verma, who are you actually competing with when you mention about IoT-led businesses? Because, your dominance in the maps business as well as competition with the foreign entity is quite known. But in the IoT-led business, who would you be essentially competing with at this particular point of time?
Historically, 10 years, I can say that IoT business itself is very fragmented. There is no clear leader in that space. I wish we had taken up the lead at 10 years back, and we would have been known just like what people say Sansara of US, which is the IoT business leader in the US. That's our goal. That's our desire. And to deal with this fragmented market, the moment we are able to reach a certain level, let's say double of where we are today, and the innovative products we are building, which will be SaaS-led, which will provide good margin. But remember, IoT-led business is a hardware-driven business. Nobody can change that, and it will remain like that. So, but the growth, definitely we are expecting a very good growth in that area.
Okay, IoT, good growth coming in. Thank you, Mr. Verma, so much for joining us on the show and sharing your views. So clearly, Puneet, so far we've given it a 6 on 8 in terms of the performance that the company has managed to achieve right now and the outlook that they've given. The key takeaways that you've picked up from this conversation, which probably will propel investors to look at the company?
I think one of them has definitely been essentially that they are further looking at partnership in the quick commerce space. So that is one, because they already, while the company is not invested yet in Zepto and that partnership, is going to be a very strong growth. The second one is largely looking at the higher growth in led by the IoT business, as Mr. Verma highlighted, as well as what they will do with the government. Now, interestingly, they also got a shout out from Mr. Vaishnav, who's the minister at the government there, and that helped the company essentially in their higher downloads. And finally, essentially in FY27 to 28, as you mentioned, in terms of international revenue, that will be the next growth vertical for the company at this particular point of time.
So strong takeaways coming in there, but completely out of time. With that, it's a wrap on this edition of Know Your Company from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.